Do you ever wonder what the current market sentiment towards Celestia is? Well, the word on the street is that the sentiment is rather bearish at the moment. Yes, you heard it right. Celestia, also known as TIA in the crypto world, is currently caught in a bit of a slump, stuck between what we call key moving averages. But let's not get ahead of ourselves. What are these key moving averages? In the simplest terms, moving averages are indicators that help us smooth out price data by creating a constantly updated average price. It's a bit like taking the noise out of the market and letting us see the overall direction. Now, you might be wondering why TIA is stuck between these averages. Well, the price of Celestia has fallen below these crucial moving averages, which essentially means it's facing resistance and forming what we call lower lows patterns. These patterns are a clear signal that sellers are gaining the upper hand in the market. So why are sellers having an advantage? It all boils down to low buyer activity. Simply put, there are fewer buyers in the market, and this lack of demand gives sellers the upper hand. They can dictate the price, which often leads to a downward trend. Now, this doesn't mean that Celestia is doomed to a perpetual downtrend. The crypto market, as we all know, is incredibly volatile and can turn on a dime. But as things stand right now, the overall sentiment towards TIA is indeed pessimistic. The overall sentiment is pessimistic, but let's dive deeper into the factors contributing to this trend. Technical indicators like MACD and RSI are crucial in understanding market trends. But what do they suggest for Celestia? Let's start with MACD, or Moving Average Convergence Divergence. This tool measures the relationship between two moving averages of a securities price. When MACD goes below the signal line, it's a bearish signal, which means it might be a good time to sell. Conversely, when it crosses above, it's a bullish signal, which could suggest a buying opportunity. For Celestia, the MACD has crossed under the signal line, indicating a bearish or downward trend. Then we have the RSI, or Relative Strength Index. This momentum oscillator measures the speed and change of price movements. Typically, an RSI above 70 suggests an overbought market, and it might be a good time to sell. An RSI below 30 indicates an oversold market, which could suggest a buying opportunity. Currently, Celestia's RSI is not in the oversold territory, reinforcing the bearish sentiment indicated by the MACD. Now let's talk about the 200-day Simple Moving Average, or SMA. This is the average closing price over the last 200 days. It's a key indicator used to determine the overall trend. If a security's price is below the 200-day SMA, it's considered to be in a long-term downtrend. Unfortunately for Celestia, its price is currently below the 200-day SMA, suggesting a bearish long-term trend. So, what does all this mean? The MACD and RSI both being bearish, along with the price being below the 200-day SMA, paints a rather gloomy picture for Celestia in the short term. But remember, these are just tools and should be used in conjunction with other information. These technical indicators suggest a bearish outlook, but what are the levels of support and resistance we should be aware of? In the world of crypto, understanding the levels of support and resistance can give you an edge. So, what are they for Celestia? Support and resistance levels are two fundamental concepts in technical analysis. They represent price levels that a cryptocurrency like Celestia has struggled to go beyond. The support level is the price at which a cryptocurrency has difficulty falling below, while the resistance level is the price at which it struggles to rise above. Imagine these levels as invisible walls that the price of a cryptocurrency bounces off of. The support level acts as a floor, supporting the price from falling further, while the resistance level acts as a ceiling, preventing the price from rising higher. For Celestia, the current support level is at $10. This means that historically the price has had difficulty falling below this point. When the price of Celestia approaches this level, buyers see it as an opportunity to buy at a low price, creating demand and helping to prevent the price from dropping further. On the flip side, the resistance level for Celestia is at $13. This is the price level that Celestia has struggled to surpass. When the price gets close to this point, sellers often see it as a good time to sell, creating supply and making it harder for the price to rise above this level. These support and resistance levels play a significant role in determining the price of Celestia. They represent psychological barriers for buyers and sellers, influencing their decisions and, in turn, the price movement of the cryptocurrency. However, it's important to note that these levels aren't set in stone. They can and do shift over time as market conditions change and new information becomes available. Knowing the support and resistance levels is essential, but how do social dominance and volume impact TIA's price? Stay tuned to find out. A. Social dominance and volume can significantly impact a cryptocurrency's price. How do they affect Celestia? Let's dive into it. Social dominance in the world of cryptocurrency is a measure of how much a specific coin or token is being discussed or mentioned on social media platforms compared to others. It's a barometer of public interest and sentiment. When a cryptocurrency like Celestia has high social dominance, it typically means it's a hot topic, and there's a lot of buzz surrounding it. This buzz can drive up demand, and as we know, when demand goes up, so does price. Now let's talk about volume. In the context of crypto trading, volume refers to the number of coins or tokens that have been traded in a certain period. High trading volumes often indicate strong investor interest and can lead to more price volatility. When a coin has a high trading volume, it means there are many buyers and sellers, which can create competition and drive up prices. Now, how have these factors impacted Celestia? Recently, both social dominance and trading volume for Celestia have decreased. This means fewer people are talking about it on social media and fewer coins are being traded. This decrease in attention and activity can be a red flag for investors, as it may indicate a lack of interest or confidence in the coin. This lack of interest can lead to decreased demand, and as we've mentioned before, when demand decreases, prices can fall. This seems to be the case with Celestia, as it's currently stuck in a downtrend with sellers having the upper hand. The decrease in social dominance and volume, coupled with bearish technical indicators and falling below key moving averages, has led to a pessimistic market sentiment towards Celestia. But remember, the crypto market is highly volatile and can change rapidly, so it's crucial to stay informed and make decisions based on thorough research. The decrease in social dominance and volume has further contributed to the bearish sentiment towards Celestia. As we wrap up this discussion, it's important to keep these factors in mind as you navigate the ever-evolving world of cryptocurrency. Let's summarize the key points we've discussed. The overall market sentiment towards Celestia, or TIA, is currently bearish. Technical indicators like the moving average, convergence, divergence, and relative strength index point towards a short-term downturn. Key resistance and support levels are set at $13 and $10 respectively, while decreased social dominance and trading volume are impacting TIA's price negatively. It's clear that the current market sentiment towards Celestia is bearish, but as always, the crypto market's volatility means anything can happen. Stay informed and keep an eye on these key points.